Good evening. So, I think everybody's probably ready with the textbook. The whole code thing, I don't know how the bookstore or the publisher got that all the way they did, but that's kind of what happens once in a while. Anyway, um, like I say, if anybody, still doesn't have a textbook, you can certainly get a used hard copy from wherever, to include places like eBay, although they're kind of slow shipping. But anyway, lots of used versions out there. It doesn't need to be the most current one, and sometimes, anyway, textbooks are always kind of a hassle. But the good news is you won't be behind because you can catch up quite easily because the assignments that are due, it's going to be a batch assignment that's due um, during the before you take the midterm. So just look at whatever you plan on taking the midterm, and it's going to be during that week. I can show you the syllabus, but anyway, we'll talk more about that later. But anyway, the first exam you take via Blackboard. You don't need a proctor for that, and just before you start on that exam, you should have handed in the homework. So anyway, taxes. So taxes are a huge, huge subject. Very complex, very much misunderstood. But just as much as you should be concentrating on earning money, you should be concentrating on how to keep the money. I mean, they're gonna you're gonna pay enough taxes. Do not worry. And the things in the tax code, if you think you're, oh, I'm getting a loophole or some sort of no, things like that are put in the tax code specifically to encourage certain kind of behavior. They want people to buy homes for, to have a little investment in the world that makes it better for everybody. They want you to be able to, maybe adopt a child without it costing you too much, or at least be able to have those expenses reimbursed. So those come as tax credits. Home mortgage and interest and taxes are tax deductible. There's a difference between deductible and tax credits, but we'll talk about that as we go. Integral part of the economy, paid on earned income, consumer purchases, wealth transfers, capital assets. So all kinds of different ways. The one that people are used to is obviously, uh, income tax paid through the IRS. But there's all kinds of other things that are taxes that, sales taxes, not so much up here, but in other states, it's huge. Things are always generally more expensive in Alaska, but when some place, has 10% sales tax, it's cheaper here just based upon taxes alone. And obviously the earned or the income taxes, states and municipalities. I think New York City's income tax is about 8%. So that's in addition to your state uh, tax that you're paying, and then the federal tax. So that can get really political because, again, elections have consequences, and what they did was they did away with the tax deductibility of SALT, is what they call those state and local taxes. They used to be able to deduct them from your federal taxes, but um, for us, it's not a big deal. It's fairly transparent. But places like California, New York, huge, huge deal. So anyway, you'll learn more about that if you happen to move to one of those places. And then you've got all these other taxes. They generally lump these in. They call them sin taxes. Some of them, like the gas taxes, those go directly to, road construction, or at least they're supposed to. And other things like hunting licenses, goes to conservation and stuff. But in my mind, all that stuff is still kind of a tax. And then these things are, meant to, um, alcohol and cigarettes meant to discourage that, and then also meant to, use on programs. So anyway, I'm not going to go into that, but if you're a smoker, I don't know, you're probably paying what, $10 a pack or so, and probably a buck of that is for the cigarettes, and the rest of it is taxes, maybe some marketing in there, but really those things are pretty cheap. So taxes, corporations pay taxes. Corporations, from a finance perspective, from a corporate perspective, corporation is like a person, which is kind of weird, but that's the way it works, and that's the way it kind of has to work. But anyway, so a corporation has to pay taxes. So if you have a corporation and it's like a C class or whatever, I don't want to get too far in the weeds, but you might have to pay taxes on your corporation, and then you take that money as income, and guess what? You get taxed again. So if you hear of double taxation with corporations, that's what they're talking about. Homeowners, property taxes, certainly huge, huge amounts. Depends where you're at, but the municipality of Anchorage is pretty pricey, but it makes sense when we're talking about tax deductions and stuff, how you might want to itemize if you're paying a lot of property taxes, that is tax deductible. Pay for government services programs, and yep, you are going to pay taxes at all levels basically. IRS does the federal business, Internal Revenue Service. I filed some things with these guys back in April, maybe even March, yet to even get an acknowledgement from them. Not exactly, anyway. This is a very strange year with COVID and all that stuff. Time of transaction, so we're talking like a sales tax, payroll withholding, and then estimated quarterly payments. If you end up owing a bunch of tax, the IRS may hit you with a penalty, or at least they may want you to do quarterly payments. If you want to overpay them every year, they're more than happy to keep your money. So if you hear somebody going, "Oh, I always get a refund," well, that's not really something to be proud of. What that means is you overpaid your taxes and you gave the government, a nice big loan for that whole year. Because what you're doing when you get a big refund back, that means that you had way too much withheld. And, it's not a savings account. If you want a savings account, establish one where you earn some interest. If you're letting the government do it for you, the IRS do it, you're not benefiting from that. But anyway, I know some people who think it's, they got one over. No, no. Anyway, normally tax year is always ends on the calendar year. So December 31st. That has not changed even with COVID. This April 15th, that got slid this year. That was, interesting times. The personal one is not actually out till October if you file that extension. So anyway, business ones are due September 15th, so I've already filed that one. But it's a very strange year. Social Security, Medicare taxes. So you may think, those aren't taxed. I actually get some of that back. Well, it'd be a beautiful thing if you did, but yeah. Anyway, so Social Security, the problem with Social Security is it often gets raided by other folks. There's not like a lockbox out there. There's not a designated Social Security fund that's got, your name and your money sitting there. No, it often gets money taken out of it for other programs. And Medicare is like old age type of insurance. 65. There's very similar to Medicare, at least in terms of name, is Medicaid. Medicaid is like a welfare program, and that's pays medical expenses for people who are down on their luck. All right, your employer obviously pays a bit of Social Security. They do a matching type thing. And if you have a couple jobs, you may run into this where you're making more than this amount here. And between your two employers, they may be holding more money back. And then self-employed, you do have to pay. So a bunch of different forms, but 1040 is probably the one you're going to end up using. These EZs and stuff, these are like, that may be something you're doing while you're in college and don't have much going on. But if you're, max performing your personal finances, you're going to be itemizing your deductions and you're going to end up on a 1040 because it's more complex. But it's also going to accommodate more things. I'm going to show you, and I'm not trying to push TurboTax here, but a lot of those automated programs, if nothing else, are a good way just to calculate your taxes to, even if you do them by some other method or have somebody prepare them. If you're just curious and you don't want to just rely on, the magic, or you don't want to go through the drudgery of doing them by hand, there's a lot of programs out there that are pretty good. And what that does for you is it allows you to concentrate more on the actual tax calculations and strategize in different things and not spend your entire percentage of time on filling in silly forms. The forms just kind of spit out the end on TurboTax or tax cut or any one of those things. Filing deadline is April 15th each year, except for this year. So anyway, it's a different time. Now the important thing though is if you start thinking about your taxes to get it done by April, the problem with that is you kind of screwed up because everything's locked, everything's frozen in time at the end of the calendar year. So what you might want to do, and if you're going to do something that, if you're curious whether you're going to get a tax deduction or you're curious how much taxes you're going to owe, you could use something like TurboTax and run that before the end of the year, and then make changes as necessary uh, while they'll still count. In April 15th, everything's locked. The only way you can even have any effect on your taxes is maybe by contributing to an IRA, an individual retirement account. But anyway, so if you're going to change something, you have to do it before the end of the calendar year. Federal revenue by taxes or by percent. So anyway, income tax is about 50%. So when they talk about, oh, we're going to tax the rich and we're going to get all the money, 50% of the income's coming off workers. The idle rich, if you want to call them that, the folks that are just living off a trust fund, or living off dividends or whatever, not hourly wages. Um, they're not that area. So payroll tax here, income tax, um, other taxes are just that little small percentage. So anyway, we have a very progressive tax system, which means that the more you make, not only more you pay more as a percentage, but you also pay way more as a total amount. So if that's you'll see when we talk about tax brackets. If we had, say, a regressive system, it would be something where there's just a flat tax where they take 10% of your income to everybody. Well, um, the uber rich would love that because they would be paying far less in taxes. And the poor would not benefit from that one bit because they're actually getting more money back. That's what that negative means. Where there's the system when you go to fill out your forms and you're down here at the bottom in terms of income, you're actually getting money back. So other things, filing status. It's not that confusing, but there's some weird terms in here. Single, obviously, we know what that would be. But you could also be in this other category, a head of household, which is a single person, but with dependents that qualify. So if you had some sort of divorce situation, or maybe were never married, whatever, and you have a child who you are claiming as a dependent, then you could file in that head of household category. The problem with this is two people can't claim the same dependent. So you and the other person need to sort that out. Who's going to claim that child? And then married filing jointly and separately. This is again where the computer stuff helps out because in certain situations where you have really disparate amounts of income, one person doesn't make much and the other person makes a ton. Um, depending on how the tax code is in your particular situation, you check one block and you see how much you owe filing together, and then you check another block and you do separate returns and you see how that works. And so if trying to do that on paper would be really a pain. But with something like TurboTax or something, it's easy to do. Qualifying widower. So this is basically somebody who, well, you know, you ended up single. You didn't plan on that, but that happened. So rather than throw that person to the dogs, they've already had a bit of a traumatic year, and rather than hit them as a single person where the taxes are going to be higher, they still will be able to file as a joint type of return, um, and it will generally result in less taxes. So that doesn't go on forever, but anyway, if you're in that situation, the tax code will explain it to you. So 1040, and again, you could fill this thing out. You could subtract line B from line whatever, and just keep going and pencil in all this stuff. But The other issue with this is for all kinds of different reasons. Sometimes you need to get a copy of your, tax um, filings for the past 3 years. Well, if you did it all by hand, you got to find a copy. Anyway, it's a hassle. You go on one of these programs and you just, go on there and you get the last 3 years PDFs, and or if you're having somebody do the taxes for you, make sure you get a copy, electronic copy, so that you can, store those things and have access to them. If you did it all by hand, that would really be a hassle. And guess what? The IRS is already slow enough, and you're going to go to the back of the line if you hand in a form that's just, hand printed. So this system, he was an old Secretary of Defense, but he makes this big showy thing about putting in a letter every year about how, because you sign off on the taxes saying they were prepared correctly, under penalty of whatever. I have completed these to the best of my knowledge. Anyway, he puts in a thing saying, look, the tax code is so complex, so screwed up. As smart as I am, I can't guarantee that I got it right. So, this is the best I got. Whatever. I'm sure the IRS just throws it away every year, but he thinks it's important to put in there. Gross income. So you're going to start out at the top, and believe me, this is kind of easier when we do it on a computer, like I keep saying. But gross income, the concepts are important. Gross is, from basic definitions, is the largest number, the big number, and it's going to include not only your money you made, but also interest income, dividend income, PFD, all kinds of stuff. Most of that interest income, those are things that show up on 1099s. I've got people who work on the campground for me, but they don't really work for me. I don't want employees necessarily, so I issue them a 1099, and that's how a lot of people do it for like contract labor. You can get in trouble if you don't do it right. They've got their own business license and all the rest of that stuff. But anyway, 1099s are, if you get a interest income, it'd be 1099 INT as an interest, or 1099 DIV for dividends, and lots of different forms that would go in addition to your W-2, whereas, most of your pay would show up. Anyway, that's going to give you this big number. Dividend income, if you had stocks. So well, I'll quickly jump into this real quick. Stocks, if you're real aggressive and you're trying to make a bunch of money on the stock market and things are going your way, and it's a good market, you probably will be making most of your money on capital gains, because you'll be buying maybe high tech stocks or stocks that are rapidly expanding companies, and they're not paying a dividend. They're reinvesting all their extra profits right back into expanding and getting bigger. And so you buy the stock for 20 bucks and you sell for 50, and so that gives you a $30 capital gain. So that's what that is. Dividend income, now we're looking at a big huge company that's probably been around a while. They're pretty much built out, and their stock price is not going up very much, because it's maybe quite high or maybe stabilized in a fairly boring industry. Anyway, like they're a utility or something like that, a private utility. Anyway, they will turn over a percentage of their profits back to their investors. They'll pay them a dividend, right? So that's where you make your money on that. So those would be income stocks, and these would generally be growth stocks. Okay. Either one of these, well, the dividend's not really applicable here, but on the capital gains section, like I said a few weeks ago, in personal finance and IRS terms and everything else, short term is defined as less than 12 months, and long term is over a year. And so let's say you did that thing, you made 30 bucks per share, and you did it all in a day. Something big happened in it, whatever. They developed a vaccine that, people were happy with. If you sold it that day, you're going to be taxed quite significantly. It's going to be just added in as regular income, and be included with your income for that year. If you hold it longer than a year, now it's a long-term capital gain, and it's taxed as an investment. And investments are typically taxed at about 15%. And depending on your income, your normal income may be taxed around 30%. So depends how much money you're making, what tax bracket you're in, but generally you want to hold things for a year if possible. But if it's a stock, and it's a super volatile one, may not stay up there that long. So there's a lot involved. Capital gains tax. So this is what they're talking about here. Long-term capital gains is lower than your ordinary income. And yeah, generally around 15%. Determining gross income. So you got all those things that we talked about. You added them all together and you put that on that particular line. If you're in, TurboTax or something, you typed in all those silly forms and it comes up with a total amount, and that's the gross income. So here's where they're putting their dividends and stuff. You won't even see these forms if you're, because again, this is not a super valued skill to be able to fill out it's just basic, add this line from that line. The strategy comes into how to maximize or get these numbers so you end up with the numbers you want. But the mechanics of filling out the form, and there's not a, that's why, people Liberty Tax or H&R Block or whatever. I've had friends who I wouldn't trust to do my taxes, and they go to some weekend course, and all of a sudden they're, a tax expert, and they're filling out taxes for people, and probably doing them a bit of a disservice. If you're doing well in life, and you're having those people do your taxes, you're probably leaving some money on the table. Plus, people are generally pretty cautious about the way they fill out their taxes. A lot of people overpay, just go, I don't want any trouble. Well, it's a cultural thing. In Europe, it's absolutely not that way. That's why they don't have much in the way of income taxes, because they know the people will generally not pay it. I was in Madrid. I sold a house, and it was, anyway. It's long enough now. The statute of limitations is well over, and I didn't do anything wrong myself. But oh my gosh, I mean, I'm in there with lawyers and stuff, and the main guy walked out, and the other guy walked in. He handed me many. They call them Bin Laden's, the 500 euro notes, and this was what they call the dark money or whatever, the money that was not in the transaction. And I mean, I'm like, this was in Spain. I sold that house, and I bought in Germany where things are a little more above board. But anyway, while I was there, it was fine. But you would not want to be an absentee landlord in Spain. Capital gains and losses. So just like I said, we're going to, be doing the math to figure out what you've made. It doesn't need to be stocks. It could be, it could be Bitcoin. It could be a home you sold. It could be something like that. But anyway, those two different categories they've got. Um, yep, they're just going to do the calculation. Adjusting gross incomes for contributions to IRAs, which would, be a deduction that would come off your taxable income. Alimony payments. People don't really do alimony so much anymore because alimony is taxable. So if there's any children involved, they'll generally try and boost the child support. But anyway, interest paid on student loans. If you qualify, those things change all the time, and other special instruments. Standard deduction. So what the concept here is that the government sets some number, and they pick a number, and they say, look, we're going to call the standard deduction $18,000. And if you're somebody who doesn't have much in the way of deductions, you don't own a home, you don't give a bunch of money to charity, you don't have, business type things going on, why don't you just take the standard deduction? It'll be easy. You don't have to itemize. You get to fill out one of those, 1040 easy or 1040 whatever, the lesser forms. And so anyway, what you do is if you don't just jump to the standard deduction. If you're smart, you itemize and you see what the total of your itemized deductions are. And we'll talk more about deductions here in a minute. But if you do all this itemization of deductions, and let's say that your itemized deductions come up to 17,000, well, then yeah, you're going to take the standard deduction because it's a greater deduction. But if your dividends or not dividends, but if your itemized deductions come up to 35 grand, well then you'd be silly not to take um, not to itemize your deductions and go forward. Um, so anyway, standard deductions, these went way up under Trump. Um, I'm sorry I didn't have the number in here for you, but I want to say it's about 18 grand. Um, which is a good thing. It means you pay less tax. Itemized deductions. So interest expense, not on consumer debt, which is like credit cards and car loans, stuff like that, but yes on mortgages. And this was this part I was getting to about the SALT, state and local taxes. These used to be tax deductible. Now they are to a certain extent, but there's limits. So what was happening was states, say California, for example, would come up with these huge state taxes, and they'd say, it's not really costing our citizens, our voters, anything because they can just deduct it off their federal tax. So the feds are kind of getting screwed here, and us being here in Alaska are kind of getting screwed as well because if you're making the same amount of money in Alaska and you're making the same amount of money in California, um, maybe their taxes or overall taxes would be higher in California, but the amount of money they're forced to pay to the federal government for that portion of the taxes would be significantly lower in California. So that kind of got modified. But again, it's political. It would change back probably depending on how the election goes. Real estate tax. So again, um, in the county, yeah. But I've deducted foreign real estate taxes also. Medical expenses. This is difficult in a good way, and I hope nobody out there is able to deduct their medical expenses because it's 10% of your income. So let's say you're making 100 grand, you would have to have medical expenses, unreimbursed medical expenses, not insurance, things that are covered by insurance that are exceed $10,000. So that's in my mind a lot, and thankfully me or nobody in my family's ever been in that position. Charitable gifts, though, again, they're trying to encourage that, right? Um, Now there's some things though. The IRS knows when they're getting ripped off, and so they'll change the law. Remember a few years ago where they used to have all these cash for, no, with the Cash for Clunkers was a different program, but where you donate your car, and you got this POS car that you can't sell for $1,000, but you put it on your taxes and you give it to somebody and you claim it's worth 4 grand. Well, the IRS does not do that anymore. Now they trace it back down to where it actually ended up in terms of an auction and how much it actually got sold for. And you're probably going to get $200 worth of tax deduction for that. I guess this is as good a spot of any to talk about the difference between deductions and credits. When somebody says something is tax deductible, that doesn't mean, $1,000 tax deduction does not mean that $1,000 comes off your tax bill. No, it just means that your income goes down by $1,000, and depending on your tax bracket, your taxes owed will go down by an amount, right? Let's say you're in, for lack of anything else, a 30% tax bracket, meaning that top amount of your income segment is being taxed at 30%. If you gave them, if you had $1,000 something that was tax deductible for $1,000, you would end up owing $300 less that year on your taxes because you're in the 30% bracket, meaning for every $1,000 you make, you have to pay $300 in taxes, and therefore if you lower your income by $1,000, which the tax deduction allows you basically to lower your income. So anyway, now credits are great. Credits are you owe $10,000 worth of income tax. With $1,000 tax credit, you'd owe 9,000. It's a one for one thing. Like credits are pretty, they're reserved for certain things. And again, adopting a child. Sometimes you'll see them in energy things like, buying an electric car for the first time buyer, or some solar things were in there for a while, but you definitely got to check before you make that purchase, because if you're counting on getting that tax credit, that program still needs to be, in force. And sometimes they have limits, sometimes they run out. And then other things like I've, sent one of my daughters out of state to a pretty expensive school, and I thought, that tuition and education expenses were going to be tax deductible because they're there's an income thing in there where if you're making over a certain amount, it's not deductible. So again, that gets back to their progressive tax system where the more money you make, the more you're taxed, and a lot of these benefits or deductions sort of drop out based upon your amount of income. Other expenses, theft, losses, job expenses. So, if you, whatever, I crashed a vehicle one time that did not have, all I had was liability insurance on it. Fair enough. I saved a lot of money on the insurance, and they weren't going to give me much for it anyway. But it was, I don't know, I think it was about a $2,000 or $3,000 total loss since it went straight to the trash heap. So I wrote that off on my taxes. Job expenses, if substantial, well, they get to be substantial when you add up every little thing. In the military, yeah, you got to have haircuts, right? You got to, whatever, it's a work requirement. So publications and stuff, if you're, have professional books that you read that are related to your job, um, home office, there's all kinds of stuff. But things add up quickly. And that's where it kind of helps running through some of these programs because they'll ask you questions and you'll go, yeah, I guess I probably should be doing that because it's deductible. Um, Financial planning, so TurboTax. I'm not shelling for these guys, but their name just keeps popping up. And they may be replaced by somebody else in a few years. It's a competitive market out there. But right now, they're probably pretty popular. And the other thing with these guys is you don't pay any of these services until you actually file. So, you can have somebody else do your taxes. You can do your taxes yourself. And if you're, curious, you can, do all the numbers through TurboTax and just never file through TurboTax and you never pay through TurboTax. And whoever you have do the taxes, those tax preparation fees themselves are tax deductible as well. So anyway, exemptions. So now we're talking about dependents, things like that. Um, Again, how more kids will um, change the amount that's withheld because it'll change the amount of tax that you're going to owe. And again, these went up in the last couple of years under the Trump administration, meaning that it's there actually is a much more significant benefit. Taxable income, just gross income, less deductions and exemptions. And then you go into the thing and it gives you your tax owed. But again, it waits till the very end. And again, the automated systems will have that up as a running total, generally on the left side. So we'll look at that in a second. Progressive tax, what they're trying to say, a positive relationship between an individual's income. Anyway, the more the wealthy folks, just like I showed, pay the vast majority of the tax. And, that's the way they want the system designed, and fair enough. There's a certain, it's called the Laffer curve, where if you tax people too much, if you say, oh, we're going to tax, the uber wealthy at 90%, uber wealthy can move. You're never going to get it. And France has tried this, and other places have tried this, and places like New York and California kind of seeing an exodus of people because they pushed it a little too far. So you can't necessarily, you don't want to kill the golden goose. You want to get everybody to have their fair share. But you'll hear people, Warren Buffett, for example, he's the Oracle of Omaha, Berkshire Hathaway. You may not have ever heard his name before, but he's always advocating we should pay more taxes. He should pay more taxes. Well, it's kind of, if he wanted to pay more taxes, he could always pay his own. What he wants is he wants everyone else to pay more taxes, and then it'll be fair. But it's He's in court right now trying to fight to pay, on tax squabbles himself. He doesn't like to pay taxes any more than anybody else, but he doesn't want a bunch of, you know, people with pitchforks showing up at his house. So he tries to make it sound like he'd rather pay more. But if he wanted to, he could just do that. So tax brackets. You can learn a whole lot about somebody's knowledge of the tax system just by listening to the couple key things. If they talk about, oh, I got a huge dividend, I'm doing great. Not a dividend, a huge refund. Like I said before, that means that they don't understand that those are withholdings for estimated taxes, and if you have way too much withheld, you shouldn't have done that. Also, you hear people say, "Well, I don't want to take that new job because it's going to push me into the next tax bracket." Let's say, I'm a single guy and gal, whatever, and I'm making 82.5, and if I make, 85,000, I'm going to be pushed in that next tax bracket. Yeah, that person is, well, whatever, not smart. Let's just say that. What that means is, let's say you're somebody who's making 82,500, and all of a sudden, you get whatever, you're making 82,502 bucks, right? You're just barely into this next tax bracket. What's going to happen is your income, the first tranche is going to be taxed at 10% up to 95, right? Second part between these two numbers is going to be taxed at 12%. Next part from 22% up to 80, well, 22% all the way up to 82.5. And that last little dollar, I said what, 502? That last dollar is going to be taxed at 24%. Not all of it. The wealthiest person, or let's say one of them, guy making $1 million, from everything he makes over uh, half $1 million is going to be taxed at 37%. But his first little increment of income, this lower part is only going to be taxed at 10%. So these brackets apply to everybody. Now there are different categories: single, married, filing jointly, and you can see that again, it's a progressive system. So the married filing jointly, well, they only pay 10% tax all the way up to almost 20 grand, whereas go figure, at about half that rate, the single person jumps into the higher category. So that's how tax brackets work. Married filing separately kind of mirrors. There's some differences, but it's a lot like the single. And then head of household, that's going to be a single person that's getting credit for having a dependent, so it goes up to 13.6. But that's how tax brackets work. And they change over time too. This one's from, 2015, so that the numbers are quite a bit different. And they had a higher tax bracket, right? 39.6, and here it's at 37. And those digits make difference. And again, what you're hoping is that, with a lower tax rate, that the wealthy will invest more. Anyway, I'm not going to try and preach to you about stuff, but the people with the money are the ones who are perhaps hiring people and doing the rest. Determine your tax liability. So tax on the base, and then percent of excess. So anyway, they're trying to make it more difficult than it is. If you understand what I talked about before about the different tranches of income and how each one's taxed at a certain percentage. Tax credit, so these are the good ones, right? This is a 1-to-1 thing. They doubled the tax credit, so I believe that is now 2,000. Other things too, what you need to know about taxes. For example, if you're doing your term project, right, and you say, "Oh, I'm going to save whatever. I want $100,000 for my children's education, and I'm going to save it, in some sort of investment, some sort of mutual fund." you know, really you're pretty much looking at a C on that paper because you didn't use your knowledge of the tax code and everything else to put it in one of the um, investment programs that's designed for that. So like a 529, 529s are kind of nice because regardless of income. So let's say you're making much more money later on, you can still take advantage of the 529. And all you have to do with that is use that child's money. You designate a child, and that money has to be used for educational expenses. If it is, then all that money is not subject to taxes. In terms of capital gains or any of that. So it makes a huge difference. If let's say you were shooting for 100 grand, and you saved up all these, different, you're basically making an annuity where you're investing all this money and it's growing and now it's worth 100,000. But let's say, because of your smart investing, you only really put in 50,000 of your cash, and the other 50,000 is interest that was earned on it. Um, if you didn't put it under a 529 or something, if it's just in a regular investment, it's just going to be treated like regular income. And your child is, I don't know, going to get what, 80 grand or something. They're not going to get that full 100,000 because they're going to have the taxes taken out of it. Whereas if you put it in a 529, your child gets the full 100 grand. So there's, we're like rats chasing government cheese. They have things set up. Politicians, not, obviously some are evil, but a lot of it is where they're trying to manipulate you to do certain things, and saving for your retirement. So the government doesn't have to provide for your retirement, saving for your children's education because an educated populace is good, and all that other stuff. So they try to incentivize behavior through the tax code that they want you to engage upon. Like I said, giving to charity, tax deductible, tax credits in there. You know, doing some sort of energy behavior that they want you to do. Again, they'll try and incentivize that. In earned income tax credit, yeah, if you're low income, it's certain things that can, reduce, and that's where people get money back. Child care, adoptions, they love TurboTax. But this is smart. Estimate your tax liability for the year. So, the IRS can make changes to the tax code, but they're usually, it would usually at least happen midsummer, maybe in the fall. They would give you enough time to change things. But once December 31st hits, once the calendar year is over, your changes to the taxes you got to pay are finished. You always pay taxes, in arrears. Right now, the taxes that you're paying, um, we're paying them late in the year. But anyway, they were for 2019. We won't pay your 2020 income tax till next spring, and the homework that's due. Okay, so let me check something here. Make sure this thing's still running. Yeah. Um, I want to show you just a couple things because it makes more sense. Ugh, TurboTax has signed me out. So I've got my own kind of personal account where I used to use this. Um, and because I kind of dawdled around. Um, so they think my name is UAA. This is all just complete BS information. You could do this yourself. But anyway, I've gone in here, wages, income, yeah, review and edit. Let's look and see what I put. I just put in just rough numbers. UA name. I just put in a marital status. I filled out a basically a bogus W-2. I think I told them I make like 100 grand. Anyway, it's what I'm trying to show you is that you can use this program to calculate certain things. So over here, they're always trying to sell you stuff. Nope. Um, I'm going to go in here, and this number right up here is telling me how much tax, just like it says, how much tax I'm going to get back based upon some of the items I've entered. So let me see. Yeah, I told him to make 100 grand, right? Round numbers. Um, I think I also told him that I had $15,000 in income tax withheld. So, it's just a stupid program. It doesn't care. I can put in whatever numbers I want, but these are, you know, useful numbers because what I want to be able to show you is the effect of certain things. When I'm telling you, um, in this case, I'm a home owner, right? Because I've got mortgage interest. I'm paying. I put in $12,000 worth of mortgage interest, and I also put down that I paid $4,000 in property taxes, and I gave 6,000 in charity, and we already knew I paid 15,000 in income tax. So let's say you're a renter. What happens here? Well, what really happens is your landlord is taking that deduction. It's a different deduction because he's got it as a business, but Wells Fargo here is the interest. So continue. It's going to go through with all these things. But let's say that I didn't buy a home. I didn't pay any interest. And look what happened. Now I owe 253 bucks. So, I mean, it's not a one for one thing, but you can go through here and you can, um, what do I have in here? 12,000. You can change the numbers and look at the effect of certain actions on a real time basis and see, what changes it's going to make to your tax system. So it's pretty useful, continue. It's going to want to go through. So this is a little tedious in a lecture format, but 1098 is the form that you get for paying interest. Let's look at some other things. Donations to charity. Let's say, screw the needy. I'm keeping it all. They get nothing. So this goes to 0. Um, Household items, stuff you go to the thrift store, you estimate it, but they get nothing. 0. So $6,000 was what I said I gave to charity, and now I say I give nothing to charity. And then you can see if you did the math, it knows my tax bracket. It knows that $6,000 worth of stuff I'd given away. Um, it affected my taxes by that amount. What are we looking about? 7,000 bucks or something. I can't remember the number was before. But anyway, it's not rocket science, but it's a whole lot more useful than, you know, filling out paper forms and trying to do calculations and I'm not married, but if I were, I sure as whatever would go through there and quickly file. Yeah, 1900, so it went down. Well, it's well over $1,000 based upon my tax deductibility. So you could go through here and change any item, and it's pretty useful. And because when somebody says, "Oh, you need to do this with your income," and there's too many variables. That other person may make a lot more money than you, may make a lot less money than you do. Here, you can type in real numbers and still, use a bogus name, or you could use your own name. It's not going to um, charge you. None of these programs are going to charge you till you actually file. So that's kind of useful, I think. Um, and then you can skip around, but this is just a lot more user friendly than, trying to remember what form you need. This thing's going to go through and query you and, you know, all those forms you've got. In fact, a lot of these programs, and again, the competition will do this as well, where you can actually, rather than type in the forms, if you work for a large company, it may have your W-2 data. If you are affiliated with a big brokerage like, I don't know, Ameritrade, Fidelity, somebody like that, there's usually an option to um, download your forms rather than you have to type in the numbers. I mean, if you're lazy, it's and also it's more useful in terms of um, the your time can be spent looking at um, your different options and different things you may want to do. So, granted, you're gonna have to type in your password and all that other kind of stuff. So your personal information is kind of going to be spread out there. So you have to trust in the security of these folks, but it's pretty useful. So anyway, we'll be talking a lot more about taxes as we go, but huge implications. Taxes are such a critical part about you being able to keep your money. It's not just earning money, but it's being able to keep it, and it will change your behavior. All right, and I got puppies that are waking up, so I think we're good. Again, the syllabus is out there with the dates on it. You can look and see where the midterm's done. You can look in the materials section. You can see the big group homework assignments that's done, the batch assignment. Um, I think all the difficulties with the book should be behind us. So until next week.